Hello and welcome back to a demo video. So in your homework, or for homework rather, you have to do problem 3-1A and problem 3-6A. Well, as we know, the book has B problems, so guess what I'm going to do? I'm going to do problem 3-1B. It's asking for transaction entries, posting, trial balance, and the adjusting entries, okay? So I'm going to walk through this entire problem. It hopefully it's going to set you up for success for when you do your problem. So I'm going to show you how to set the problem up in Excel, as well as how to go through some of the journal entries. Hopefully, getting you more exposure to debits, credits, identifying what account I need to hit, and going from there. Okay, so they give us. I just flip the page, and they give us a number of things to do, right? First, they tell us, hey, set up a general ledger with the following accounts, okay? Cash, AR, prepaid rent, prepaid insurance, equipment, accumulated depreciation equipment, accounts payable, utilities payable, unearned karate fees, common stock, karate fees earned, advertising expense, repairs expense, wage expense, rent expense. So we're gonna go through and we're gonna set up T accounts for all of these. Okay, we're gonna set up our journal, and instead of using the ledger, we're gonna use the T accounts like we did for last homework. I think it just makes it a little easier for us. Okay, and they give us some adjusting entries in D. Okay, so I'm just going to focus in. I have a hard copy of the book here, so I'm just going to focus in on that. I have Excel here up and ready to go. So first thing we need to do is go ahead and create our journal, right? So first thing I make sure I want to have is my date. And then I need to create space so we can go ahead and list our accounts and the explanations. So again, this is just an arbitrary amount. I'm picking 4, we'll go 5. No, we'll stick with 4. 4 rows, merging in center, left align, and then I'm just going to drag down just to make sure I have enough room for all my journal entries. Okay? Again, I just picked an arbitrary amount. Totally doesn't matter. In column F1, I need my debits. In column G1, I need a credit row. Remember, sorry about that. Remember, I want to center these just because it looks nicer. I want to format row F and column F and column G number-wise. So I want my commas, and I want to get rid of my decimal places. And I'm going to come over to H1, and I'm just going to start creating T accounts, right? In the problem, they give us the T accounts that they want us to have, or the ledgers that they want us to have. So I'm just going to go ahead and create those, right? Nothing too difficult. We did this last week. Merge and center to sales. I'm going to type in cash. I need my bottom border, and I need my left align. Okay, and then the next account they tell us is AR, or accounts receivable. So I'm going to put in my bottom border. I'm going to merge and center these. I'm going to type A/R. Again, just for abbreviation purposes, or for simplicity purposes rather, I'm just going to use the abbreviation. Left align. So that's the first one. Then we have prepaid rent and prepaid insurance. These are 2 separate accounts. So I'm going to scroll over. Again, get my my single bottom border, merge and center. Prepaid rent. And then I'm going to scroll over a little more, and I'm going to pick, or I'm going to make this one my prepaid insurance. And again, for the height of these, I'm just selecting something arbitrary, not a big deal. Okay. I'm going to go through the entire thing and do this. This is recorded, so you can feel free to fast forward if you'd like to. But I want you to notice one thing that I'm doing here is I'm making sure that I put all my assets on the top, and then I'm going to list all my liabilities and then my revenues and expenses. So being that they gave us the accounts to use, I'm going to assume that as we go through our journal entries, we're not going to have to create any more T accounts. Unfortunately, last chapter, we didn't have they didn't give us all the ledger accounts, right? They only gave us our permanent accounts, our assets, and we had to create some expenses. But if you notice here, they're telling us that they're giving us expenses in here. So I'm assuming, I'm hoping that that as we go through the journal entries, we won't need to create any more T accounts, which will be nice for us. Okay. So I have all my assets, right? Remember, accumulated depreciation, we said, is a contra asset account. So it looks like I got all my assets here. Now I'm going to go down here below, and I'm going to put in my liabilities. And the first liability that they give us is accounts payable. I'm going to abbreviate that AP for accounts payable. Not sure exactly how many transactions we're going to have here. So again, just making up arbitrary or, creating space. The next liability that they give us are utilities payable. I'm just going to abbreviate. I know this is kind of a pain in the rear, but unfortunately it's something that we have to do. We have unearned, I'm just going to say unearned revenue. I know it says karate revenue or unearned karate fees earned. It's the same thing. We'll just say unearned fees. Okay. And as we go through each of these journal entries, I will make sure that I specify again and reiterate the adjustments that we're doing, why we're doing them, and going from there. And then it looks like after we get through our liabilities, we have our equity accounts, right? So we have we have common stock. Now remember, everything we're doing here applies to a corporation, somebody that follows GAAP, right? Small mom and pop shops, are they going to have a common stock account? Probably not. They're going to have an account called owner's equity, right? Or owner's capital account is what they're going to have in place of common stock. So keep in mind as we go through this, the concepts that we're learning, again, will apply to the individual. Now, I'm going to say karate fees here. there's a difference, a big difference between unearned fees and fees, right? The fees are examples of our revenue. It's something that we've earned, um, and we recognize that revenue. Okay, so fees is just another name for revenues, and I understand that can be uh, a little confusing, especially with the terminology. Fees and revenue. It's the same thing here. Okay, and then they give us our ad expense. They start giving us our expenses. And to make this process go a lot quicker, I'm just going to copy and paste these because I can do that. If I click copy and then paste, and I got the same there. I got advertising expense. I just need to change the name, right? This isn't an advertising expense now because we already have that T account. The next account that we have after advertising expense is repairs expense. And that's typical for a company. They will have repairs expense. And again, it's, if maybe they need to repair a building or a piece of their equipment, or something like that. So repairs expenses is something you'll commonly see in a business. After repairs expense, we have wage expense, and again, definitely we'll see wage expenses, regardless of the company. They hire employees, they have to pay those employees. We'll definitely see those as well. Okay. After our wage expenses, they give us rent expense. Then they give us insurance expense. I'm just going to abbreviate that too. Insurance expense, and depreciation expense, equipment, and utilities expense are the last two. Now, I'm just going to do two more here real quick. Okay, so in the real world, right, we're just going to have one depreciation expense account. We will have a number of accumulated depreciation accounts based on the number of property, plant, and equipment that we have. But depreciation expense, we only need one. And anytime we book depreciation, we're always going to debit to depreciation expense. The credit will have to go to accumulated depreciation. But again, the accumulated depreciation, there will be a number of accumulated depreciation accounts depending on, what assets we have. If we have building, we'll see building, accumulated depreciation building, equipment account, accumulated depreciation dash equipment, shed. Let's say we have a shed that we buy. Well, that's an asset. We need to list it on our books. Again, shed, accumulated depreciation shed. Depreciation, it's the depreciation expense account. It's always going to be the same. Okay, we're going to use the same account. And then the last one is utilities. Okay, so we have all our T accounts here, or our ledgers. Now we're ready to go ahead and start booking our journal entries. So the first thing they tell us that Hong Karate School began business on June 1st. Transactions for June are as follows. So unfortunately, guess what? We got to journal all 11 of these journal entries, and that's good because that's getting you practice. And especially if you go into accounting, guess what? This is what you're going to be doing, debits and credits all the time. Okay? So on June, which I believe is 6th if I'm correct, June 1, Po Hong contributed 10 grand of his personal funds in exchange for common stock to begin the business. So what happened here was Po Hong invested in his business. He put cash in his business and he got common stock for it. So, what two accounts are we hitting? Cash, common stock, right? We just read the problem and it tells us the accounts that we're going to hit. So, excuse me. So, what do we debit? What do we credit? Well, let's pick cash. Cash is an asset. Assets increase with the debit. I'm debiting cash. For how much? $10,000. What's my credit? Well, I need to credit common stock. Common stock increases with the credit, decreases with the debit. In this example, my common stock is going up, so I need to credit it. Remember, when you're doing your journal entries, please make sure that debits go first, credits go second. You always want to indent those credits just by clicking this increase indent button. So I'm going to type in common stock as my account, $10,000. And I need to put an explanation. What happened here? Well, what happened was Po Hong contributed money and we sold stock. So I'm just going to say sold common stock. We need to post these now. So I'm going to post $10,000 in the cash account, and I'm going to post the credit of $10,000 to the common stock account. Bear with me here. I want this to look a little nicer. So I want to select all these cells. I'm going to click comma, and I'm going to get rid of my decimal places because I don't need those. Okay? So, did the journal entry, posted to the ledger. Moving along, second journal entry. Please make sure you skip a space between your journal entries. On the second, so 6/2, what happened? Well, purchased equipment for $47.50, paying $750 cash with the balance due in 30 days. So, this is a compound transaction. It has a number of things, right? We have more than two accounts. We bought equipment, so we have to hit our equipment account. We used cash, so we got to hit our cash account. It says balance due in 30 days. So guess what? That's an accounts payable, right? That basically what happened was Po went to the equipment store, for lack of a better term, said, I need to buy some equipment. They said, sure. What do you need? Well, I need X, Y, and Z. X, Y, and Z cost $47.50. Okay, time to pay. Po says, I only got $750 cash. Supply store says, no problem, I'll take that. I'll bill you the rest. The rest you owe me in 30 days. Po says, no problem. That is an obligation to Hong Karate School. Okay? So, we identified the three accounts, right? Cash, equipment, and accounts payable. What's going up in this example? Well, cash. Cash is increasing. Equipment. Equipment is increasing. Cash is going down. Accounts payable is going up. So, what am I going to debit? Well, assets increase with a debit, decrease with a credit. Which asset is going up? Equipment. So I'm going to debit equipment for the cost of the equipment, which is $47.50. What am I going to credit? Well, I'm going to credit cash. I know that because we already mentioned, hey, cash is an asset. Assets increase with a debit, decrease with a credit. So I come down, I indented slightly, cash, $750. Okay. Now I'm going to list my accounts payable. Well, the difference between $4,750 and $750 is $4,000. Okay. Remember, all debits have to go first, all credits have to go second, and we need to indent our credits. This is proper form. Okay. If we put cash, equipment, and then accounts payable, right? So we'd have a credit, a debit, and a credit. That's incorrect. It has to look like this. All debits first, all credits second. Okay? So now we need to put our explanation. What happened here? Well, I like to italicize my explanations. Just kind of sticks out for me a little bit. What did we do? Bought equipment. Yes, I know that's not how you spell bought, but I just abbreviated it, okay? Bought equipment. That's good enough for now, okay? So now I'm going to post these, right? So I'm going to post my equipment. I need to go to my equipment account, which is right here. I'm going to post that debit of $47.50. I'm going to post the credit to cash for $750. And then I'm going to credit my accounts payable for $4,000. Okay? What's next? Well, skip a space, do the next journal entry. On the 3rd, paid 6 months rent. Okay, so we paid in advance, right? We started business on June 1st. We paid our rent till the end of the year, right? June, July, August, September, October, November, December, right? So we paid in advance our month or our rent, okay? So on 6/3, I need to identify what 2 accounts do I have? Well, paid 6 months rent, $64.50. Okay, so that's a dollar amount. I used cash. Cash is an asset. I'm decreasing my cash, so I need to credit cash. But what am I getting for this, right? What's coming to me? Well, I'm purchasing another asset in the form of prepaid rent. Prepaid rent is an asset. I need to debit that. So I'm going to debit prepaid rent for $64.50. I'm going to credit cash for the same amount, $64.50. Notice I didn't recognize an expense yet. It doesn't say expense in the book because we're doing accruals. It says you prepaid your rent. Okay, so I have an asset, prepaid rent. I used an asset, cash, to pay for that. So I'm going to go ahead and book this, right? Or I'm going to post it. So I'm going to credit cash for $64.50. And I'm going to find my prepaid rent account, which is right here. And I'm going to post my debit of $64.50. Okay? So we forgot to put our explanation. Well, what happened here? Well, I'm going to italicize it and say prepaid 6 months of rent. Done. Always skip a space. So on June 4th, what did we do? June 4th paid 1 year premium on liability insurance. The amount was $876. Okay. This is another example of a prepaid expense, specifically prepaid insurance. So I'm going to do the same exact journal entry. The only difference is I'm going to debit prepaid insurance, credit cash. So prepaid insurance for $876. And I'm going to credit my cash. Notice I indented cash for $876. I need to put an explanation here. What's my explanation? Prepaid 12 months of insurance. Right? Because it's a 1 year contract or a 1 year insurance policy. I need to post these. Well, my cash is right here, so I'm just going to post that $876 to cash. Oh, sorry. I need to find my prepaid insurance. Oh, there it is. I need to debit that, $876. Okay? What's next? Well, on 6/5, what did we do? Paid June newspaper advertising, $525. Okay? So think about it this way. What month are we in? June. What am I paying for? Advertising expense. Basically, we just identified the accounts, right? We have advertising expense. How do we increase an expense? With a debit. So add expense for $525. How do we pay for this? Cash. Cash is an asset. How do I decrease cash? With a credit. 525. Now I need to post these, right? I need to post them to the ledger. 525 is posted to cash. I'm going to come down and I'm going to find my advertising expense, which is right here. And I'm going to post that debit of 525. Okay. Now, let's see what happened on June. Let's see what happened on June 6th. Okay. On June 6th, they tell us billed participants for karate lessons to date. So, we've gave karate lessons. It's now time to bill those people. We are going to send them a bill, right? We've earned the revenue we earned the fees because we provided them with the karate instruction. We're issuing them a bill, right? We're not getting cash, right? This is an example of deferred revenue, right? We recognize cash is going to come later. So remember in the video that I said that what do you always do? You always debit an asset, credit revenue whenever you're booking accrued revenue. So we're going to debit accounts receivable for $2,200. We're going to credit sales revenue, karate fees for $2,200. Okay? I apologize. I hate the fact that my phone is hooked up to my computer, and every time I get a call, it has to comes through the computer. It really ticks me off, and my wife knows this and continues to call me as I'm recording videos. I apologize. Okay, so I booked everything, right? I booked the AR, booked the karate fees that I earned, right? I need to put an explanation here. What happened, right? What happened was I billed for services earned. I recognize revenue. So I'm going to say billed for fees earned, or I could say billed for fees recognized, okay? So I need to post this. So I'm going to find my accounts receivable, and I'm going to post that $2,200, okay? Now I'm going to go to my karate fees ledger, which is right here, and I'm going to post that $2,200 credit. Remember, always skip a space between your journal entries. So now I'm ready to see what happened on the 7th. So 6, 7, what happened? Well, received $855 from a local company to conduct a special 3-session class on self-defense for its employees. The 3 sessions will be held June 29th, July 6th, and July 13th at $285 per session. Okay, so what's going on here? Somebody paid me cash. I didn't do anything for the cash yet, right? I have to provide a service. So, excuse me. This is an example of deferred revenue or unearned revenue. I got cash for something I didn't do yet, okay? So remember, what do? In that case, we always debit an asset, credit a liability. So I'm going to debit cash for the dollar amount that they told us, $855. I'm going to credit my liability account, which is unearned. In our example, we're calling it unearned fees for $855. Okay? So, what I need to do is I need to first, before I post everything, I'm going to put in an explanation, right? So, what happened? Received payment for services to be provided. Okay? So I need to post these. Well, my cash is going up, right? So I'm going to debit cash for $8.55. I need to find my unearned fees, which is right here, and I need to post that. Remember, unearned fees is a liability. So I'm going to credit it for $8.55. If I forgot that I had to credit it, just go back and look at your journal entry, because you're basically taking what you did in the journal, posting it to the ledger. That's it. Okay? So let's go ahead and let's look at what happened next on 1/8. Oh, sorry. How about 6/8? Sounds a little better, doesn't it? 6/8 collected $2,800 on account from participants. Okay? So what that means is on June 6th, I billed $2,200. Okay? On June 8th, I collected $2,800 on account from participants. Now, you might be looking at this and saying, well, wait a minute. How's that possible? We didn't have a beginning balance in our accounts receivable. Okay? We don't have a beginning balance. How can we collect more than what's on there? I completely understand that. We're going with what the book said and what the book tells us. Because chances are, later on down the road, we're going to bill more clients. Okay? In the real world, you're not going to collect more than what you have. Okay? So, what's happening here? Well, we already provided the fees or the service, right? We already recognized the revenue. We recognized the revenue and said, we have a right to receive cash. That is our accounts receivable. 2 days later, we're actually getting paid. So what's being affected? Well, cash is going up, right? So I got to debit cash for the $2,800 that they told us, okay? What am I crediting? Well, I'm crediting that accounts receivable. Why? Because they don't owe me money anymore, right? I'm collecting it. They're paying me. So I'm going to credit it $2,800, okay? What's our explanation? Well, collected fees on account. Okay? Not cooled, collected. Okay. Collected fees on, sorry about that. Collected fees on account. I need to post this. So I'm going to debit cash for $2,800. I'm going to credit revenue for $2,800. And if you notice, I have a $400 credit balance. That is not correct, meaning accounts receivable was an asset. I increase it with a debit, decrease it with a credit, debits the normal balance side. I have $400 credit balance. That means somebody paid me too much. I owe them. Okay? Probably an error. At the end of the day, everything's going to work out. But know that if this happens in the real world, somebody paid you too much. Think about it from the other point of view. I'm going to assume that we all have credit cards, right? If you pay too much, if you overpay your credit card, right? If you owe them $2,200 and you send them a check for $2,800, one of two things are going to happen. You're going to have a credit balance on your account so you can go out and spend $400 and not owe them any more money. Or they're going to send you a refund check for $400 saying you paid us too much. Okay? So, let's keep on moving. Skip a space between your journal entries. 6/9, what happened? Paid $275 to repair damages to wall caused by an errant kick. Wow. Okay? So somebody kicked the wall and it broke, all right? So we have to repair our studio, right? What are we doing? Well, we're paying cash, right? Okay, so cash got a decrease. But this is a repairs expense. I'm repairing something. I'm using cash to fix something. So I need to debit repairs expense for $275. How about 275? I need to credit my cash. Notice I'm going to indent my cash or indent my credit. Type in cash, 275. What am I doing here? I'm just going to say repaired studio. Okay. I need to post these. So I'm going to post my cash, credit cash, 275. And I need to post the debit to repairs expense. Here's my repairs expense T account, debit 275. Skip a space between your journal entries, 610. What happened on 610? 610 says billed participants for karate lessons to date, $2,000. That's what we were looking for, right? So, what are we doing here? This is an example of what? Deferred revenue, right? We're deferring revenue, or I'm sorry, scratch that, accrued revenue. We're going to recognize first, get the cash later. That's accrued revenue. So whenever I do or book accrued revenue, what do I got to do? Debit an asset, accounts receivable, credit revenue, or in this case, karate fees. Okay, so I'm going to debit AR for $2,000. I'm going to credit my karate fees. Okay, for $2,000. And what is this? Well, I billed clients for services performed. Okay, I need to post these now. So I'm going to go to my accounts receivable and I'm going to type in $2,000 for a debit balance, or I'm going to post that debit balance to AR. I'm going to come down here to my karate fees and I'm going to credit the $2,000 of fees that I earned. So I recognize those fees. Okay. The last journal entry says paid assistant wages, $950. Oh, sorry. Okay, so what are we doing? Well, we're paying our employees. So we're paying them with cash. Cash goes down. What are we recognizing? An expense. So I'm going to say wages expense, debit for $950. I'm going to credit cash for $950. And I'm going to post these. So there's my credit to cash, $950, and my debit to wage expense, $950. So we just did all our journal entries, okay? Now we can go and do our adjustments. So we did A, we set everything up. We recorded the transactions in a general journal. That's what we did right here. We posted them to the ledger. That's what we did right here. We use T accounts. That's okay. C says prepare an unadjusted trial balance as of June 30th. Then we need to prepare adjusting entries. Okay, so I'm going to come back in another video and do that because this has been kind of long. So come back in where we're going to finish problem 3-1B. We're going to show you how to do the adjusted trial balance, and we're going to show you how to do those adjusting entries as well. Okay, so thanks for tuning in, and we'll see you back here real quick.